Hey everyone, and welcome. Today, we are going to be demystifying one of the most powerful financial tools out there for Canadians, the Registered Retirement Savings Plan, or as you probably know it, the RRSP. I mean, who doesn't want to keep more of their money away from the tax man, right? Well, you're in the right place because we're going to show you how. Okay, let me ask you something right off the bat. Do you want to keep more of your hard-earned cash at tax time? Of course you do. I think that's a goal for pretty much all of us. And today, we're exploring a key strategy to make that happen. And believe it or not, the key to doing just that, well, it might just be hiding in one powerful little account. So let's get right into it and talk about the RSSP. Okay, first things first, let's tackle the biggest question, the why. Like, why should you even care about an RRSP in the first place? Well, it really all comes down to three huge tax advantages that can seriously boost your savings. All right, advantage number one is the tax deduction. And this is the one you feel right away. It's that instant gratification. Just think about it like this. Every single dollar you pop into your RRSP gets subtracted from your taxable income for that year. It's super simple. Less income to tax means a smaller tax bill. Boom. Next up, and honestly, this is where the real magic happens, is tax-deferred growth. Think of your RRSP like a special tax shelter, a greenhouse for your money. Inside all your investments, we're talking interest, dividends, capital gains, they just get to grow and grow, completely untouched by taxes year after year. That lets your money compound way, way faster. And the third massive advantage? It's all about strategic withdrawals. See, the whole game is about timing. You put money in during your peak earning years when your income is high, which gets you a bigger tax deduction. Then you pull it out in retirement when, hopefully, your income and your tax rate are a whole lot lower. It's just smart. You're getting the tax break when it saves you the absolute most. Okay, so we've covered why it's so awesome. But let's pump the brakes for a second. What exactly is an RSSP? Let's break down the fundamentals. So the name says it all, right? Registered Retirement Savings Plan. Registered just means the government has given it a special stamp of approval for these amazing tax perks. And retirement savings, well, that's its main job. But here's something super important to get. An RRSP isn't an investment itself. Nope. Think of it more like a special kind of basket. You can fill this basket with all sorts of investments, stocks, bonds, mutual funds, you name it. All right, let's get practical. Let's talk about the how. As in, how do you actually get your money into one of these things? It really all comes down to knowing your limits and, of course, your deadlines. Okay, time to talk numbers. For 2025, the maximum amount you can contribute to an RRSP is $32,490. But wait a second, before you get too excited, that huge number probably isn't your personal limit. Your actual contribution room is a little more, personal. So here's how it works. Your personal limit is whatever is lower of two numbers, that big annual max we just saw, or 18% of the income you earned last year. So you just figure out what 18% of your previous year's income is. If it's less than that yearly maximum, then boom, that's your limit. By the way, you don't have to guess. The CRA puts your exact limit right on your notice of assessment. Now, here is one of my absolute favorite features of the RRSP. Look, life gets busy and maybe you can't max out your contribution every single year. The amazing news is you don't lose that room. It just carries forward forever. It actually builds up over time, so you can catch up on those contributions later when you have the cash. Okay, everyone, pull out your calendars for this one. This is a super important date. If you want your contributions to lower your tax bill for 2024, you have to get that money in by March 3rd, 2025. Seriously, put a reminder in your phone right now. Don't miss it. All right, we're still on the how, but now we're going to flip the script and talk about taking money out. Now, even though it's built for retirement, there are actually a couple of really cool programs that let you borrow from your own RRSP tax-free for some of those big life moments. So this breaks down the two big ones. First step is the Home Buyers Plan, or HBP. This lets you borrow up to a whopping $60,000 completely tax-free to use for a down payment on your very first home. Pretty incredible, right? Then you've got the Lifelong Learning Plan, or LLP. With this one, you can take out up to $20,000 to help fund your education. Now, here's the catch for both, and it's a big one. You are basically borrowing from your future self. You have to pay this money back into your RRSP over a set amount of time. Okay, so what if you need to take money out for something else? Maybe an emergency or something unexpected? Well, you can, but you've got to be really, really careful here.
Taking money out early for anything other than those two special plans comes with some immediate and kind of painful tax consequences.
This chart shows you exactly what I'm talking about. It's called a withholding tax. The second you make an early withdrawal, your bank is legally required to hold back a chunk of it for taxes, right on the spot. And as you can see, that percentage goes up fast, all the way to 30% if you're taking out a larger amount. But honestly, the biggest thing of all is that the contribution room you used, poof, it's gone. Forever. You can never get it back. Okay, we're almost at the finish line. Let's wrap up with a quick heads-up section. Think of this as the fine print, the key rules you absolutely have to know to make sure you're using your RSSP the right way.
The number one rule you have to burn into your memory is the age limit. You can keep putting money into your RSP right up until December 31st of the year you turn 71. But after that day, that's it. The account has to be closed. From there, you'll need to convert it into something that can start paying you an income, which is usually a registered retirement income fund, or a RIF. And there you have it. That's our deep dive into the world of the RRSP. We've gone through the why, the what, and the how of this incredible tool for building your wealth and saving a ton on taxes. But, knowledge is only half the battle. The journey really begins with that first step. So my question to you is, what's your first step going to be? Are you going to go check your contribution room, set up a tiny automatic deposit, or maybe book a chat with a financial advisor? Whatever it is, now's the time to start. Thanks so much for joining.